Hello, everyone. It's Cathy Sabater, and I'm here with a phenomenal realtor, Collette Jimenez. Hey, Collette.
Hey.
So, Miss Collette, what do you actually specialize in as a realtor?
Hi guys, my name is
Mhm.
Collette and like Kathy said, I am a realtor and I specialize in first-time home buyers, VA buyers, and short sales.
Short sales. I haven't heard short sales in a while.
It has not been trending. We saw a lot of them in '07, '08, and '09, and we haven't been seeing them as much with things shifting in the market and Biden's pause on foreclosures coming to a close.
Mhm,
I have a feeling that we might start seeing a few more,
mhm.
and I'm poised and ready to go.
You got it. And I'm going to speak as being a mortgage broker. When we're talking about short sale, people can agree or disagree. But if you start taking out all these loans and maxing out the loan to value from your home, that could be one of the reasons why you could be having a short sale. On top of the fact, are you renting it and the condition of the home, right? So
Yeah.
what we wanted to talk about today and what we are going to be doing on a weekly basis is at least give you some information in regards to what's happening with the San Diego real estate market on our level, not the CNBC that they're saying that the market is crashing. It's not crashing. It's just changing.
Right.
Colette, would you expand on that?
Absolutely. And thanks for your time, Kat. So the San Diego market has continued to show dynamic changes, and those are being driven by economic factors, demographic shifts, and evolving buyer preferences. What we're seeing is a notable increase in both property value and the demand. So we're seeing that equity rising for sellers, but we're seeing a bunch of buyers still wanting to get in on this market. And to date, that median home price in San Diego in general is $950,000. And that is a 10% increase from the same time last year.
Wow.
So it's not a huge increase, but it is a significant increase, especially if you're a first-time home buyer trying to get your foot in this market. Um, that rise is attributed to limited housing inventory. We're still seeing that limited, a steady influx of buyers that are attracted to the San Diego market. You know why we love what we love, the lifestyle, the employment opportunities, and of course, our amazing climate. So, let me talk a little bit about the supply and demand issue. San Diego's defining features in this real estate market trend has been the persistently low inventory levels. So what we're seeing is only about 1.8, so less than 2 months supply inventory on the market right now. And this shortage is a significant driver of those upward prices when buyers are competing, for these lower number of properties. The demand for homes in San Diego continues, and we have the appeal of tech professionals, remote workers, and retirees, and those are making up a very diverse buyer pool right now. What we're also seeing, Kat, is we're seeing migration patterns. Believe it or not, there are people that are buying in San Diego because it's more affordable. And those people are relocating from areas like the Bay Area and LA, where our housing market is actually relatively lower compared to theirs. And then they're seeing a higher quality of living here. So I was wondering if you could talk a little bit about what the mortgage rates and lending industry looks like right now.
So right now, when you had mentioned that there was a 10% increase in equity from last year from the median home price. So let's talk about median home price. You have 100 homes that are for sale. They just put them all together, divide by 100, and that's called the median home price. So
Yes.
each zip code may have 5%, some may have 10%. When we're in COVID, we had double digit equity growth. We're now in the single digits, which is very good for us, especially for first time home buyers. As a homeowner, then obviously the higher the equity growth, right, the better it is because then your house is worth more. In regards to mortgages, as from last year to this year, you can hear in the news today, oh my gosh, mortgage rates have gone down again. Yes, they've gone down, but remember, they're coming down from 8, 7. So we're still in the sixes, right?
Yeah.
Somebody might get a 5 something, but you putting a lot of money down or you have a lot of equity, mostly VA and FHA loans because they're insured, VA guaranteed by the VA. FHA insured. So that's why those rates are lower. When you go with a conventional loan, it's for profit, higher, you need to make more money, your debt to income and your credit scores have to be related accordingly. So right now, when you look at the market, people ask, when's a good time to buy? When you want to, when you find the house you want. Now, as far as I'm concerned, what I try to do with my buyers, I say, hey, what mortgage payment are you going to feel most comfortable with, right? Because you can qualify for X, but that doesn't mean you want to make that monthly payment. On top of the fact, we do understand that the rates are supposed to go down. And so most buyers understand that, hey, 6 months, a year from today, more than likely we're going to refinance and lower our interest rate to lower the payment. But we can't guarantee anything for you because the market dictates the rate, right? So if you're watching some of the videos that I do, the 10-year treasury, the last the video I did had to do with what do we need for interest rates to go down? Well, one of them is the 10-year treasury, right? And how much do we charge banks for money? So when we're in COVID, right, the feds did a whole bunch of creative stuff to keep the Fed fund rate to 0. So those people who have 2 and 3 and 4% interest rates, the reason why you have it is that the feds said, hey, banks, I'm not going to charge you any money to lend out money. Okay. Well, if they're charging us, the banks now, 4.5%, 4.25%, if you add 2+% to that, more than likely, that's what the interest rate's going to be. Right. So there's a lot of different things that go into what the feds are doing, right? As an individual, your credit, how much you're putting down, the property that you're going to go, what loan type are you getting? All of that comes into play with what your interest rate could be. But the market is the biggest indicator. Are the rates up today? Are the rates down? Well, rates can change like 8, 9 times in a day. So until you actually get into the process, like Collette is saying, hey, I contend with what? First-time home buyers, VA buyers, and now we have short sales that are more than likely going to start coming because if you maxed out on your equity, which means you either got a VA or FHA loan because they allow you to do that to some extent. They've made some changes, right? But at the end, how can you sell the property if you owe this much, right? After you pay what it costs to sell the property, then that's where we're going to have some short sales. So unfortunately, the demise for some is what? A benefit for others, right? An opportunity for others. So for buyers, I'm saying get pre-approved because 100%. If you find the house you like, you can now write the check. Because right now, just getting pre-approved means you got a check to write, right? Yep. But if you see a house, if the rates are not what they want to be, what are you here for? Are you going to wait for the interest rate to be the way you want it to be? Because that's what people said when they were in the 3s.
Yeah.
They're in the 6s now. So keep waiting if you want to keep waiting. Or do you shop and find the house you really want? To me, that is the best part. Because if you have the ability to pay $3,500 to $4,500 on rent, which that's what's happening in some of these areas, then you should consider, then investing and becoming a homeowner.
Kat, I really liked what you said about the checkbook because in the analogy that you had made, you have that checkbook, you have the ability to write the check, but doesn't mean you have to write the check. But I like to tell buyers something very similar and say, let's just get ready to go. You're unsure about those rates? Well, let's keep an eye on them. That's what we have Kat for. You're unsure about the market? Let's keep an eye on it. But let's look around. Let's poke around. Let's do the work to be pre-approved and qualified to go and look. And then if and when you do find something, you're ready.
Right.
And that's the best point. That's the best point. It stinks to be finding things you love and in no position to get them.
Correct. And not knowing what your payment could be. So at least if you get pre-approved. So what I do is I do like a little video and I say, hey, your interest rate could be from here to here. Based on the market, are you okay with this mortgage payment before you go out there and look at the house? right? Because you don't want to go look at a house and you go, I don't want to make that payment. Well, then don't look at the house. So what
Right.
I encourage people to do is once they get pre-approved and they looked at houses, I ask them to text me the information so I can rerun the numbers. I send the video out to my buyers and I send the video out to the realtor so the realtor understands, are they okay with making this payment? Because I cannot tell you what the interest rate's going to be until you find the house, once you get the offer accepted. And we'll do some other videos later so you can understand what process we're talking about. But in the meanwhile, what we're trying to say right now is San Diego market is still hot. It's a seller's market, right? Because we don't have enough inventory. But buyers think it's a buyer's market because they seem to have more time on the market to see any other houses that are available.
Yeah, we're definitely seeing a little more hang time. This time last year, as an average, San Diego saw houses staying on the market about 35 days,
Mm-hmm,
and last year, as opposed to 50 days this year. So we're seeing houses, even though prices have gone up incrementally, we
mm-hmm,
are seeing a little bit more lag time. We've
mm-hmm,
also seen, Kat, about 1,200 more houses coming on the market in March of this year
mm-hmm.
compared to March of last year to date. And
Right.
so there's a few more houses trickling on. Prices are incrementally higher, but they're hanging out on the market a little bit longer. And
Right.
so that maybe that signals a shift coming.
Yep.
Who knows? We'd be super rich if we could say what it was doing.
You got it.
But yeah, so I did want to do a little spotlight real quick on some
Okay.
of our San Diego neighborhoods, and then just kind of close it out with what challenges and considerations we need to be thinking about and what that future looks like.
Okay.
So let's talk about downtown San Diego. We have a resurgence in downtown San Diego with new residential high rises and mixed use developments that are transforming the skyline a little bit. So look out for those changes.
Mhm,
The median condo price in downtown San Diego, is $750,000. And you see a really high demand for that urban living, being in close proximity to the amenities and that vibrant cultural scene. So that's continued to be an attractant for young professionals and empty nesters alike, being drawn to that convenience. The North County coastal area, like Encinitas, Carlsbad, and Del Mar, are seeing a much more substantial appreciation in those home values. The median home price for that area is over 1.2 million. And the allure of the coastal lifestyle, coupled with excellent schools and recreational opportunities, is continuing to attract affluent buyers. One of the most affordable places in San Diego, of course, is our East County. We'd be remiss talking about them. Hey, East County girls. So the East County encompasses La Mesa, El Cajon, Santee, Lakeside, Spring Valley, Lemon Grove, And what we're seeing there are definitely more affordable options compared to the coastal and central areas. The median home price here is $650,000, and it makes it an attractive choice for those first-time buyers and families. We also have growing infrastructure and community development projects that are really attracting a lot of notice for people. So there's all these new trends, mixed use development properties, sustainable and green buildings, investment opportunities, and commercial real estate. And all of those are continuing to feed into a very healthy and robust market for San Diego. So let me just tell you what challenges we're seeing. Obviously, we talked about low inventory. That continues to be a problem. And then housing prices for the first time home buyer. It could seem like a daunting place to jump in. But like you and I talked about, it's a great time to get pre-approved. And let's do a little look-see and go from there. The positive trends are how the equity is for sellers. And what we're going to see is continued rate fluctuations, right? And so what we need buyers to do is buyers and investors get ready to go when that shift happens, when those rates drop, get ready to pull the trigger on them. And then looking ahead, the San Diego real estate market really is poised to continue growth and evolution. The city's continued desirability as a place to live, work, and invest will likely sustain the demand and support those property values. So we have those ongoing infrastructure projects. And a big one is the expansion of the trolley and the upgrades to the downtown airport, which will continue to increase accessibility and further boost our real estate sector. So all in all, 2025 is shaping up to be characterized by, my dog is dreaming, characterized by rising property values, a strong demand, and really exciting new developments.
Well, great, because Collette is good on first-time home buyers, VA buyers, and short sales. She's also doing a lot of listings as well, because some people are selling to buy. Some people are selling and like, I don't know where I want to go. I don't know if I want to live abroad, if I want to go, because we do have the empty nesters, because who is selling their homes to buy? Predominantly the people who have enough equity in their home to either downsize or to figure out what they want to do, right? And you also have younger families who have outgrown their homes, right? That they need a bigger space. So thank goodness for the equity growth that we have. And at the end of the day, Collette, what phone number should they call you at?
Call me at 619-838-1696.
It was great speaking with you, and we'll do another video next week.